Okay, let's start with some meditation in the weekly news today. Um, um, no. Okay, buckle your seatbelt, ladies and gentlemen. We are here live in the studio today with Jake and Connor. How are you boys today? Connor, how's it going?
Marvelous, thank you for having us. Yeah, how are you, mate?
I can't complain. It's the end of the conference, end of Sigma, and we are still standing. I think that alone deserves a bit of a gold medal to us today, actually. Yeah. How are you, Jake?
Yeah, I'm good, thank you. Feeling very zen after that.
Yes.
I've not been to Sigma either, so I've probably got a bit more energy than you two have.
Yeah. There were some late starters here in the team today. You heard back in the door without mentioning too much here, but obviously that's what Sigma does to you. It takes a couple of years out of your life, I think, these conferences. But anyway, I mean, Connor, you managed to take yourself to Sigma. How was the experience for you?
Briefly, do you know what? I was quite surprised. It's
Yeah.
funny because I've been in our gaming now for like 4.5 years, and this was my first ever Sigma.
Okay.
So you hear a lot of rumours about it, and you kind of you hear all the stories about what it's like, but I didn't realise it really is like that. When I got there, like you couldn't move for people. It was
Yeah.
absolutely jam-packed. There were DJs everywhere, just cocktails being. So it was like a nightclub, but with
Yeah.
white label sportsbook solutions on offer as well. Very strange.
Yeah.
But I liked it. Had some good cocktails.
Yeah.
Met some nice people.
Yeah, I mean they call themselves the Agimi Festival for a reason,
Yeah,
and
absolutely.
we were summarizing it the other day, and we said that Sigma is just full on chaos, but it's great for business.
Yeah, absolutely. Yeah.
And I think that's the way to summarize the conference. It's just chaos everywhere, but it's great for business at the end of the day. So you have to take it for what it is. But did you go to any of the conferences or any of the talks, or you were there for a brief while, I think?
Yeah. I saw your talk. Yeah, I watched it.
Yeah, this is
Loads. I learned so much. It was really, really productive. Yeah. No, I'll be honest with you. No, I didn't get past the bartenders. As soon as I got a cocktail in my hand, that was it. The afternoon was over, I'm afraid.
Yeah, fair enough. No, I hosted a panel that was titled "Is crypto casinos bad for the industry?" And so we asked the audience, and they said yes. And so we could pretty much move on to the next panel after that. It was a 1 minute panel. Okay, great. We answered that question. Yes. No, but that was an interesting panel. The conclusion of that discussion was that today, as the shape and form of the crypto casinos are today, they are bad for the industry for the reason that it's just lack of regulation. So crypto casinos exist outside of the regulation generally, right, in order to reach these difficult markets and so on. But if we can come to a point where crypto becomes more regulated and the crypto casinos become more regulated, and just the regulators within the online sports betting and online gambling industry catches up to this kind of crypto movement, then potentially the crypto casinos and the crypto movement will be good for the industry. So that was the kind of conclusion from that panel. But moving on from Sigma to kind of the news of today, we're gonna zoom in on North America, like we do often in these weekly news updates. And Jake, jumping over to you here. First of all, New York State have posted all-time high in handles and so on. Can you go into this story a bit more?
Yeah, definitely. So it was a record high in October for revenue, not for handle. I think it was a record for that fiscal year.
Okay.
The way they report is a bit peculiar. But yeah, these latest figures are just further proof of FanDuel's crazy grip on the US sports betting market. New York is obviously the most expensive state to operate in. Huge population there, and I think there's 9 operators that are licensed and active in New York at the moment. And FanDuel has accounted a crazy market share of, where is it? Let me see. Sorry. Yeah, so their market share at the moment in terms of revenue is 86% ahead of DraftKings in second place.
Wow.
And it's more than half of the overall market in GGR terms, so 52%. You've got Caesars a little bit further down on 10%, and then BetMGM with 5.5%, and then after that, there's sort of 4 or 5 companies, scratching around for sort of 1%, if they're lucky, really.
Yeah.
But that's the US market in a microcosm,
Yeah.
reflected as a whole.
That's unbelievable. So essentially, FanDuel is bigger in New York than all other operators, including DraftKings, Caesar, BetMGM combined.
Yeah, it's crazy.
Right? That is absolutely
So
insane.
124 million in operator revenue, and FanDuel was responsible for 76.4 of that.
Right. It's remarkable. I mean, FanDuel is going from strength to strength. I think we're gonna go into that in a little bit as well. But it seems again, and we're gonna go into that even later, that this market is a market for the giants. The bigger becomes bigger, essentially.
Yeah.
Yeah.
Yeah, and even, we've talked about the giants before. There's kind of 4 leading companies in the space, but FanDuel is so far above and beyond any of those even. Ryan Butler, our US editor, tuned into the FanDuel Capital Markets Day yesterday, which is one of the first times their CEO, Amy Howe, has kind of publicly spoken to investors. He live tweeted the whole thing, and there's some really interesting stats here that kind of, again, prove FanDuel's lead. So percentage of revenue spent on promotions, FanDuel was 29% versus 44% for DraftKings and 64% for BetMGM, which shows their efficiency. What else have we got here? So FanDuel 2022 net gaming revenue breakdown. Sportsbook accounts for 66%, casino 23%, fantasy is 4%, and then racing is 7%, which I thought was quite interesting. And then finally, breakdown of the top 3 US online sports books by gross gaming revenue. We've spoken about FanDuel, 42% of the market. Then you've got DraftKings at 24%, and BetMGM in third with 15%.
Oh yeah, it's amazing. I mean, what do you think, Jake? Like, will this dominance continue of FanDuel? I mean, we can slide into kind of the second story here, which is the fact that our friends over at Ellis and Kirkheads, they are saying that BetMGM is the likeliest contender to FanDuel, not DraftKings. But do you think that it is possible to disrupt FanDuel at this point?
In my opinion, no, not at the moment. Eilers, like you said, put out a really good report on this, and Connor wrote the story for the website. So maybe Connor has some insight on whether they can be knocked off the top spot.
Yeah, I mean, absolutely not would be my guess. I can't see the future, but I would say no chance. I think the point of this Ian Kay report that was, these guys just put out some of the best analysis anywhere in the industry. I think some really good market analysis from the US. I think the main point that they were making there is that if there's any brand that's going to reduce FanDuel's market share, then BetMGM, in their view, is probably the best place to do so. But in terms of, taking over from the top spot, I mean, if you look at the countrywide share of sports betting GGR, I think BetMGM is something like 15% over the last few months.
Yeah.
And FanDuel's just above 40% according to their data. So they did identify BetMGM and DraftKings as the 2 sort of significant threats to FanDuel. The only possible, plausible, really big challenges. Although there were a few other businesses that have a chance as well. You've got Caesars and Barstool on a kind of second tier there of other businesses that have still got that potential to take away some market share points. And then you've also got some kind of outsider chances. So you've got people like Bet365 who, as of right now, are only live in a couple of states in the US. They haven't really, dedicated much resource to that, but they've obviously got the resources to do it if they choose to. Yeah. And brands like Fanatics, which we haven't seen exactly what they're going to do yet. And so they're all going to try, I guess, and come for FanDuel's market share. But it was interesting to see Ian Kay's perspective on why FanDuel's got this top spot, and the way they set it out is essentially that FanDuel has got everything going for it. It's owned by Flutter, so it's got a massive team of European talent that it can rely on, that's got that broad experience in online gaming and sports betting for years and years. It's got, in Ian Kay's view, the best product out there, and that's that they do independent testing on the different sports betting products that are available, and FanDuel's been coming out on top, I think, ever since they started doing these tests, and they regularly update them every quarter. what they've seen recently is that the other brands are starting to catch up. You've got functionalities like same game parlays are a big deal for FanDuel, and I think they were the kind of driving force behind the introduction of that game type, of that bet type. So they kind of had a dominance over that area for the first year of operating same game parlays, and now all the other operators are kind of cottoning onto it and catching up. But yeah, they've just got so many advantages. They've got so much going in their favour. It looks like an unassailable position, no?
Well, you'd think so. I've got the report in front of me, and they say FanDuel's moat is considerable but not unassailable. They've said, very few kind of operators can go pound for pound with FanDuel, but yeah, like as Connor said, BetMGM and DraftKings have been labelled as significant threats.
Right.
So BetMGM, they've said, has high online sports betting overlap with FanDuel. The biggest issue there is the joint venture and the future of the joint venture between Entain and MGM Resorts. There's going to be a battle over ownership at some point, and it could get messy. And I think further down in the report, it might have been an external analyst suggested that there's too many decision makers there across both businesses. Is that slowing things down? Whereas FanDuel's very streamlined and can go straight to market with any new developments.
Right.
And then DraftKings is the other significant threat. Again, it says, high online sports betting overlap, but trails FanDuel's access to institutional expertise and spending power.
Mm-hmm. Interesting. Yeah, so it seems like today FanDuel is just doing things a little bit better than the others, and it's having a massive impact on the overall market share that they have been able to accumulate. But I like so essentially what Ian K is saying is that the biggest threats today, DraftKings and BetMGM, are those that have the resources to essentially challenge FanDuel. Whereas some of the other kind of former contenders, say Caesars, for example, are not likely to disrupt FanDuel because they have chosen to kind of hold back on their investment.
Exactly. Yeah, and those three companies at the top are all very much equally committed to iGaming and sports betting,
right,
two essential verticals. Whereas Caesars, for example, despite spending a fair amount of money on marketing, is now prioritising casino over sports betting because sports betting was simply too expensive.
Yeah.
They put that advert out recently with Vince Vaughn, who's going to be their king of casino.
Yeah, it was good.
Yeah, it's the sequel to The Breakup, I think. But yeah, they've got JB Smoove as well.
Yeah, it's like they've got the whole cast of Curb Your Enthusiasm. It's just there's going to be more and more. Larry David's going to do the next one.
Don't say that.
I'd love that. Pretty good. Yeah. I thought it was interesting.
The theme tune would just play at the end of the ad.
I thought it was really interesting what you said about FanDuel's share of GGR, or it might have been NGR, from iGaming, though. I think that kind of demonstrates what everybody's been saying this whole time, which is that iGaming and online casino is where the real money's going to come from. If you think, in fact, what was it, 23%?
18%.
18%. It was a decent whack from iGaming, considering that that's only a handful of states where they're able to operate that, compared to, between online and land-based, probably 30, 31 states where they've got sports betting operations, 22 online for sports betting operations. And still you're getting close to 20% of revenue from casino operations in just a handful of states. I think that they're kind of making it very clear that that's the golden egg that everybody needs to go for. So that's going to be,
and I think that's why BetMGM is, like they've said, is their closest challenger, because they're the iGaming market leader, obviously, in the States. So, I mean, these companies just need more iGaming legislation. There's not enough of it at the moment to get excited about. We need to see some movement from some states, like we have done with sports betting, but there isn't any out there, it seems.
Yeah, no. It's actually I spoke to someone from FanDuel the other month, and they talked about the opportunity of iGaming, online gambling in New York. So there's been the speculation before, and obviously you have the state senator Joseph P. Adabu, who is a big proponent of online gambling in all shapes and forms, and he's been very bullish of the fact that he thinks that he'll be able to get the legislation through to legalize online gambling in the state of New York. However, not that many other analysts have taken in serious because just the nature of politics in the state of New York is such that they just have too much opposition. However, FanDuel was quite optimistic actually of the state of New York actually having decent chances to legalize online gambling, and they said like don't discount the fact that the state needs money and it's difficult times now with inflationary risks and so on. And so they made the argument like keep an eye on New York because it's not impossible. And if online gambling would be legalized in New York, it could be kind of a watershed moment where other states follow suit based on the massive state of New York's movement.
Yeah, I mean that would be a huge catalyst. You'd see some pretty mega share price movements there, I'd imagine, if that were to happen.
Oh
but
my god, that would be insane if that would happen. I mean, Evolution, for example. I mean, it would be incredible. Yeah.
But yeah, you're right about New York. I mean, at the turn of the year, they described betting as the economic engine of New York. It's pretty much transformed their economic position in terms of tax revenue from operators. So I can see why they would be open to iGaming. But then again, these operators thought a similar thing might happen in California, where they'd be delighted to get the tax revenue, and then they said, well, actually, we don't care about that. We're not interested. No.
Well, they should have had the tax revenue. They wanted the tax revenue, and I'm never going to stop flogging this dead horse. They just asked the wrong question.
Yeah.
On the ballot.
Yeah.
You're a bit like Trump running again for president.
What would you like?
You can do their 2024 campaign.
Would you like to have the bad option or the worse option? It's like, no. Give us a good option. Just, they ruined it for themselves.
Yeah.
But I would be really curious to know, out of those $600 million that was spent, like if there was no campaigning, what the actual result would have been. I have a feeling
probably would have done better.
All these stupidly animated ads, it basically took away votes from the actual.
Yeah. I think you're probably right. I think you're absolutely right.
Yeah, and obviously we were just talking about iGaming, and you said you bumped into Pear from PlayStar. Yeah, and they're an operator with a very kind of iGaming-led strategy in the US. What did you guys talk about?
Yeah, so Per Hellberg was the former CEO of Catena Media, and I think it's important to point out in this story because he is an expert in player lifetime values and how to optimize player lifetime value from being acquired from an affiliate to then actually turning a profit in the operator. So he runs PlayStar, a small operator. I think they are live in New Jersey only right now.
Yeah, that's right.
And they are casino focused, and he makes the argument that what everyone is saying that the market is only for the big operators is not true at all. He's just saying that the strategy that the small operators are generally pursuing, which is generally like sports betting led, is not the right strategy if you want to be profitable as a small operator. You need to be casino focused in the United States today. And correct me if I'm wrong, Jake and Connor, maybe you guys remember, but there's a statistic that even though there's only 5 states live for online gambling in the United States, the revenue that is generated from online gambling in those states is still bigger than the total amount of GGR or something similar for online sports betting in the United States. Something like that.
Sure.
Yeah, there's something
yeah,
along
probably
those lines.
better margins or something, I would imagine, but I'm not sure of the figures.
Yeah, there's some statistic. It was like Eurocomply or someone who did some form of survey where they made the argument that the tax revenue potential from online gambling is absolutely insane if you compare the two verticals to each other.
Yeah.
But yeah, the audience might be able to fact check this, and we can check this in the news broadcast. But point being is that online gambling is far more profitable for the operators than online sports betting. And Per Hellberg, he tries to optimize PlayStar. He pays like insanely high CPAs to the affiliates in order to get like really high level and highly profitable customers. And the difference in the player behavior in the American customers to the European customers are totally different. So a player in Europe would churn much quicker. So he made a comparison that in Sweden, for example, a player will on average deposit 6 times before they churn. And when they churn, they never come back. In Sweden, there is something like 300 licensed brands or something like that. Whereas in the state of New Jersey, there's like 40 or 44 licensed brands. And so the player doesn't have the same option as in Sweden, for example. And players in the state tend to be a lot more. They tend to stay a lot longer, and they tend to be a lot more loyal to the brand. And even after they churn, there is a high probability that you can reactivate them, which is why our friend Michael Hansson of Interactive has moved from Malta to Miami, because he runs one of the premier reactivation companies called Interactive, and they have figured out that the United States for them is an absolutely gold mine, because they can reactivate far more players and that are far more important to the operators. And so that is kind of Per Hallberg's angle into this, that even as a small operator, if you just focus on acquiring the right customers, albeit at a very, very high CPA, then you can eventually turn a profit. And he also talks about, affiliates, they can earn revenue by two ways, right? It's CPA, where they get paid a fixed fee for the sign-up customer. It's a one-time fee. Or they can earn rev share, which is basically they earn a percentage of the revenue that is generated from the player, but on a long-term basis, basically. And so affiliates, especially who are listed on the public markets, they get addicted to taking CPA deals, because it's basically money upfront.
Yeah, quick cash in it. Yeah.
And publicly traded companies, they fight what are going to be the numbers for the next quarterly report, right? So they want the money now so that they can acquire a higher market cap, a higher valuation of the company, so that they can acquire more affiliates. So they need the market caps to stay high. But actually, it's not the right strategy for an affiliate to pursue CPA deals, because long term they will lose money. So a rev share deal will generate a lot more money for the affiliate over the long term. But the publicly traded affiliates choose not to go down that route, because they just need the money now so that they can keep the valuation in the company high. And that plays in the favor of the operators in the United States, is Per Hallberg's analysis, because he says that they would never be able to afford to do rev share deals, for example. He can only do CPAs. So you just pay the money up front, take the loss short term, and then make revenue, make profits long term, essentially. That's his argument.
I was just looking it up because I had this vague memory, but Better Collective, it was Better Collective, when they put out their Q2 report, were quite clear that they are trying to move, well, they are in the process of moving from a CPA model to a rev share model in the US.
Interesting.
And that's going to,
very interesting.
They say it's going to be transformational for the US segment. And
right.
You think, if you think what would be a generous CPA, might be $1,000 or $1,500, but you might be able to sign up players who are going to gamble $20,000 a year. Or
it will be
$30,000
several times that revenue.
Yeah.
It's just gonna take, like, say, a year to earn that revenue back, rather than today, so to say. And that's so for Better Collective, it's essentially one step back for a year in order to take 3 steps forward.
Yeah.
The only affiliates, as far as I know, on the publicly traded markets that pursue a rev share kind of strategy today is GIG. Funnily enough, on their media side, they have something like 75% of all revenue is coming from rev share deals.
Yeah.
They are set up for a great future. They are already there, so to say. And obviously on the markets, they have been doing really well lately, as opposed to Catena Media and Better Collective, who the last year has been really bad for them.
Yeah, I think this conversation is really interesting, but again, it just showcases for me the difference in maturity between the US and markets we're a bit more familiar with in Europe. I think at one of our events recently, we had a panel called, is the US heading for a rude awakening on responsible gambling? And, I don't want to be the guy banging that drum, because everyone's excited and rightly so. But this is exactly what got, all the British operators in hot water, basically, was going after high value VIP customers.
Right. Yeah.
Because, they make the most money, they generate the most revenue, but it's not sustainable and it's not particularly responsible. And we've seen them sort of pay the price for having to adapt and change those strategies in the UK over the last probably 3 or 4 years, I'd say. Maybe 2 to 3 years.
We have. But you just get these firms like Entain now, who obviously take the CSR side of things very seriously, the responsible gambling side of things very seriously, now talking about how important it is to have a large recreational player base, because that's the only sustainable way.
But this was forced on them, really.
Yeah,
by regulators.
The only reason they're in the position to be able to say all that stuff as market leaders is because of the years and years, obviously, of VIP programs and all that stuff.
Yeah, we know how incentivized VIP account managers were. Like if they moved from one operator to the other, they'd be paid hundreds of £1,000s to bring those customers with them. And yeah, the other thing, obviously, with rev share is that you're effectively, making money from customer losses, which is fine. But then there's responsible questions to be asked there as well. I was speaking to Alex Dubin, a guy who's founded a company called Better Off, and he was saying CPA makes sense for their platform. They're kind of like a tipster affiliate platform, so they want people to make picks and then share them. And he was saying it's kind of counterintuitive for us to then make money from our player losses, because we're supposed to be educating bettors about which bets to make. So he was strict and said we're just going CPA only, and like you say, that might harm the overall revenue potential of the company, but it's it's about strategy and sustainability in the end, I guess.
Yeah, the optics of it are not good. There was a story in the mainstream media recently about football clubs and Sky Bet, do you remember? And about how football, what was it?
Football clubs were taking a share of the losses of their fans.
Yeah, essentially, yeah. So the football clubs are like exploiting their fans for their gambling losses. It doesn't look good at all. Great, no.
But I mean, this thing isn't going to be. It's not going to be an issue in the US for years. So, let's not rain on their parade. But it's just something to keep in mind.
Yeah.
Just be aware of it, so you can get in front of it instead of being forced into it and having to pay the price at a later date.
We'll have to get Per on the podcast,
Yeah.
But he talked about this as well, that actually the player behavior of these like high value customers are different again from the European players, and they haven't seen these like potentially harmful behavior from that many players as you would in Europe.
Okay.
That the American players tend to be better at knowing when to stop gambling.
Okay, that's interesting.
He talked about it yesterday. I can't remember exactly. He went in depth to talk about the player behavior is just totally different from like the European player. Even like they are used to kind of the brick and mortar way of gambling, where you go to the casino, you deposit money, and you play, and then you withdraw and you leave the casino.
Yeah, and once it's gone, it's gone. You don't keep topping it up.
And so similar in the online environment, the American player would generally deposit money, play, withdraw. So they wouldn't keep money in their wallet, for example. And so Per is saying like one of their job is to educate the players that like you don't need to withdraw your money every time because it's super expensive for them to process all these withdrawals all the time.
Honestly,
so, like,
we'll look after it for you. You just leave it with us.
Leave that balance there, just in case you might want to play again.
We'll keep it safe. I don't know. I watched that Uncut Gems with Adam Sandler. He didn't know when to stop. I'll tell you that much. Have you seen that?
Which movie?
Is it Uncut Gems? Is that what it's called?
I haven't seen it. I've heard it's tense.
Oh my god, it's like a 2-hour panic attack. It's horrible. But this guy does some betting. But I wonder if it's to do with like the way that American sports work as well. If you put a bet on an NFL game or an MLB game, then that's you for the next like 4 hours.
Yeah.
Trudging through these terrible sports. So I know some people.
Well, you gotta make it exciting somehow, right?
Yeah, exactly.
Some they go to the bottle, and others they go to the gambling.
Yeah, the ball's in play for about 11 seconds of the entire match. So
some people do
get some bets on to spice it up.
Yeah, I actually read that. Yeah, 11 minutes out of 4 hours or something. The ball actually moves.
I was making that up.
No, quite literally though. Not boring. So boring.
Not for me, but I'm sure there's lots of fans out there. So let's not alienate all of those.
But like in Britain, it's like horse racing, dog racing. It's over in 30 seconds, and it's like right, let's place another bet. Let's go. Yeah. So I can see how culturally maybe our sporting cultures lead to that kind of different.
Look at us judging Europeans, but what about cricket? You have this stupid sport that goes on for days.
Yeah, and then it ends in a draw. 5 days and it's a draw. Yeah,
great.
Yeah, fair enough.
No, not my cup of tea, I must say.
Throw the ball. Okay. Anyway, okay. Next point is a bit of a sad point actually, because it's talking about how difficult it is for smaller operators to succeed in the United States. The market has claimed another victim, and this time it's our dear friend Daniel Grassner of MaximBet. that was owned by Carousel Group that sent out a press release yesterday and an email to their customers, essentially announcing that they're closing shop and announcing that players are able to. They basically need to withdraw their balances. Can you go into this story? We just published it like half an hour ago here.
Yeah, we did. Yeah, we've put our own version on the website, but it's worth pointing out as ever that this was broken by Sportico yesterday, and their reporter Eben Novi-Williams, who's a really good scoop getter basically in our industry. If you're not following him already on Twitter, then you definitely should be. But yeah, so they basically said it's too expensive for them to compete in the US market. They talked about the macroeconomic challenges as we've covered multiple times on the podcast before. But they also said an increasingly cost-prohibitive marketplace, and that's again fairly self-explanatory when you've got, DraftKings guiding to losses next year of $500 million. I don't think MaximBet would be able to afford that. Just basically in the pursuit of a smaller percentage of market share. So, yeah, they've pulled the plug. Sadly, getting Nicki Minaj on board didn't seem to work for them. It was pretty incredible deal at the time. We were surprised by it, but I think while she obviously opened the brand up to a huge global audience that might not have heard of them otherwise, I wonder how many of them were able to convert into depositing sports bettors. There's probably not as much of a crossover there as we might have first considered.
A partnership like that as well is like so good for getting headlines, but I think obviously we are living and breathing our gaming and sports betting every day with journalists in the sector, and it's so difficult to see sometimes what that really looks like to your average person, to your average US-based non-better. Are they going to start placing bets because Nicki Minaj is involved now? Or it seems like it.
The thing is, there are some incredibly good brand activation partnerships with these people. Like for example, Drake. He personifies the gambler, the kind of the degenerate, like rich and famous lifestyle gambler, and obviously he has done fantastic work in promoting Stake as the place to kind of pursue that lifestyle, say. But it's authenticity it comes down to, because Drake is authentic in the way he in the way he presents that partnership. Like he presents himself as a gambler, and he gambles high. He bets high, wins high, and he sits next to the basketball court. He bets at the same time, and he presents the partnership as much more authentic. Whereas like Nicki Minaj, she made some statement when the partnership was announced that she made some like a bit cheesy quote or whatever about gambling, and it didn't really come across that authentic. And after that, you haven't really seen Nicki Minaj being out there presenting herself as a sports bettor or something. It's just a disconnect between the what the person is saying, what you're promoting, and the actual behavior and the persona of the brand. I remember like. That authenticity is just so important. I remember like the UFC did some like brand activation partnership with like Paris Hilton, where Paris Hilton like live tweeted during a fight like so excited for the fights, like go go Connor or something, and it was like you saw it and you're like, okay, that is definitely like a shitty PR person who has written this message, right? It's just a disconnect, and then instead of it becoming something good, it just becomes a bit silly. You know what I mean?
Yeah, that's right. I mean, most of the people that seemed to react to the announcement initially were just fanatics of Nicki Minaj, and she could have been advertising anything and they would have got behind it. But me and Ryan were talking about this last night, and he made the point that Pat McAfee, who's a really opinionated former NFL player, he spent like a long time building up a brand with Barstool, and has now moved over to FanDuel and has a podcast that's pretty much about betting, and he's probably the one person that is able to actually convert sports bettors by being a brand ambassador and an influencer. But then Ryan made the point they're paying him $30 million a year to do that. So I don't know how the relationship worked with Nicki Minaj, but I don't know how successful it would have been.
Yeah, I mean it's the same there with like David Portnoy and of Barstool. Like I said, it's just a super inflammatory like personality, and he's all over the place and causing controversy all the time. But it's but it just makes sense. Like him together with that brand, he'll move people towards the brand in an authentic way. Whereas Nicki Minaj, while she has a huge following, I think it's in the same size as Drake, for example. But like they wouldn't necessarily like the following wouldn't necessarily follow Nicki Minaj to sign up at MaximBet if it's not really like if you don't portray the lifestyle of why they should follow her. Yeah.
That's why you were right about Drake. He's online every night gambling $2 million on roulette.
Let me ask you,
it's
guys,
believable.
You two will know. Is that his money? Is that Drake's money or is that Stake's money?
So what I hear, and there's a lot of rumors flying around, but what I hear about the business model of Stake and how they made this partnership work is that they would pay Drake a fixed sum of money every month. So say they would pay him like $10 million a month or something like that. And he wouldn't be able to just take that money, withdraw that money, but he would need to turn over that money.
So it's basically bonus funds.
It's a bonus.
He's got wagering requirements.
Yeah, exactly. So you get the bonus.
That is
and so the actual cost of the salary, whatever you want to call it, is not 10 million. Then, for example, since you need to turn it over a couple of times, maybe it's a couple of million that is the cost for Stake in the long run. Essentially, this is how they would work with the streamers as well. They would get X amount of money every month. They need to turn it over, and then whatever is left, that's what they can withdraw. Essentially, that's what I heard. But I also heard someone saying that Drake was paid a fixed amount of money, and what he I think some very smart people in the industry have pointed out that he was exceeding the max bet on certain games, which basically alluded to that this is not real money he's playing for. It's fake money and so on. And so a lot of theories out there, but I like the first business model of like get paid fixed amount, turn it over, whatever is left. Like I like that. I think that's cool.
Clever. I would take the job if they offered it to me. Do you know what I mean? Yeah.
Maybe you can pitch 5 million instead of 10 million.
I've actually got more than 9 followers on Twitter. So, but talking about responsible gambling in the US, man, that kind of thing freaks me out with Drake. Betting $100,000 a spin on roulette, and it's on Twitch where it's all like little kiddies watching and stuff.
It's like glorifying this like insane. I mean, we've grown up in industry here on the European side with like, very strict like concerns on responsible gambling and so on, and they just twist it opposite.
It's just winning like
and glorifies
4 million on us.
You'd never get away with it in Europe. But,
definitely not. That's outrageous. But yes, that could be, like, as you mentioned, Jake, for that session from Valletta, yes, there could be a rude awakening somewhere down the line in the US on responsible gambling,
Yeah, that's right. And, obviously MaximBet, sad to see them go, but they're not the first company that's not been able to, make a proper go of it in these conditions. I think it was only last month we saw Fubo TV, the sports streaming platform, shut down its sportsbook operation. Said a similar thing, it can compete in the environment and wants to protect its long-term profit targets, which was kind of slipping further and further away the more it invested in its sportsbook. So, that sportsbook's no more either.
Yeah. Can we go into that story? So there's Fubo Sportsbook. They withdrew, and but they are stuck with some of these kind of brand partnership deals, and they are now getting sued by New York Jets, right? Can you?
Yeah, that's right. So this is something I hadn't previously thought about, but it's worth considering if you are a kind of upstart US disruptive operator, because you have to do these marketing deals, whether it's Nicki Minaj, whether it's a partnership deal and a sportsbook with the New York Jets, just to get your name above the parapet. Otherwise, you're going to disappear. The trouble is, then, if you don't make it, you're still beholden to those contracts and those agreements. Like you say, Fubo signed a sportsbook deal and sponsorship deal with the New York Jets, and that's ongoing. But the Jets has filed a lawsuit saying they haven't made a payment of nearly 1.2 million that was due on October the 1st. This is a 5-year deal they're locked into, bear that in mind.
Wow.
And it was set to cost more than 12 million overall. So, that's an uphill battle now for Fubo to meet those payments. It'll be interesting to see what happens as a result of the lawsuit.
Yeah. No, absolutely. And also, trouble in paradise over in the US at the moment. Difficulty for the smaller operators to gain foothold, and I suppose that we are seeing now operators obviously withdrawing, and I wonder if this is just the tip of the iceberg. There are many other operators that are trying to gain foothold that are seemingly not being able to done so far. And if MaximBet was not able to close investment, you would assume that it's going to be a lot more difficult story to tell for the other operators that are small, that are also seeking investment, to be able to close anything when one after the other are falling away.
Yeah, you wouldn't want to. I mean, it depends on. It's a difficult risk to take right now, right? Yes. If you're thinking about a small brand trying to go into the US,
yes,
you'd have to have something really special to want to put your money behind it when there's competition like that. I think that, going back to that E&K report, there are about 8 operators that they identified as sort of plausible threats, at least, to FanDuel. And although that was focused on, FanDuel specifically, I think it's a fairly good barometer for the rest of the market at large, So there's maybe 50 licensees across the US right now. And those 8, there aren't many more than those 8 who look like they're really likely to make a good go of it.
Yeah, but even in those big guys, I think we're still going to see consolidation because there's not room for all of them. A few of those have 1% market share. You've got companies like PointsBet, for example, that are, they're chipping away, but they're not making any major, inroads.
Yeah.
But they've got great technology. They've got operational expertise from a sports crazy market like Australia, for example. Have obviously launched in Canada. You can see one of the big 3 or 4 operators bringing in a company like that, and then they sort of grow in size and move up that ladder of competition, so to speak. But the people below that are the ones you've got to fear for.
Yeah, absolutely. Final kind of bonus addition to the news as well on the Curacao. I wanted to jump into as well. The finance minister over there, Javier Silviano, I hope I'm pronouncing that okay. He made an announcement the other day that to clarify kind of the upcoming gambling regulation in Curacao. So this is obviously a hot potato right now in the industry, especially kind of the operators that are operating more in the shadows, say. Can you talk a bit more about that, Jake, as well, this story? And they have really made a big U-turn here on what they previously have communicated.
Yeah, that's right. And shout out to Sonia, our journalist, who's been covering Curacao for a few months now. So while Connor was downing porn star martinis at Sigma, I think she was she was sitting in on the panel with the finance minister.
Excuse me.
But no, yeah, you're right. So she did an interview with the finance minister a few months ago. I think it was only in September, and they said at that time that there was going to be no crypto written into the regulations. There would be no way to process crypto payments, which is obviously a bit of a shock because that's one of the main draws. At present, you think of companies like Stake that we've discussed already that are Curacao licensed. A big advantage is that you can run crypto casinos and crypto gambling. But then at Sigma this week, they've done a U-turn on that, and the law will now include a clause that allows operators to make and receive payments in crypto. He said until such a time as wider crypto regulations enter into force. So, that's open to interpretation. They might be looking into their own law that goes into that in a little bit more detail. But good news for operators that are there and that are intending to keep going with a Curacao license. There's going to be an 18-month transition period because Curaçao's a bit peculiar at the moment where you've got these master licenses and then they have to sell their licenses to operators, a tier below. And they're basically scrapping that model so that each company now can have its own standalone license. But yeah, it's going to be a bit of a transitional period for Curaçao, and I think might be March 2023. They've said they want to go live with the new licensing regime Q2 2023. So yeah, we'll have to keep an eye on it.
Yeah, stay tuned. We will try our best as well to attract Javier to Agame's New York as well. Hopefully he's available there, but we're working on that right now. It would be interesting because that's right at the time where they are expected to then relaunch the new regulation.
Yeah, and also our Valletta show recently, obviously, we had Tim Heath on stage say that he expects there's going to be a mass exodus from Curacao.
Right.
And that was
maybe that was
exactly that. Potentially, that was a trigger that made them, turn this crypto regulation around. But that's mere speculation.
Well done, Tim. Well done, Tim.
Yeah, he's an influential voice.
All right, guys. So we're obviously not going to have more drinks now after this show as we usually do, because Connor is a bit hangover here after a couple of days at Sigma. But instead, we'll cheers with our water today. Thank you, boys. It's been great to have you guys here.
Absolute pleasure.
In the studio, in person.
Thanks, guys.
Thanks everyone for listening in. Have a great weekend ahead, and we will see you next week.
Thanks for having us.
That's it.
All right.